Good morning, everyone, and let me also add good evening to New Zealand. I'm delighted and it's fantastic to welcome you all to this digital talk. Today's topic will be, as you well know, forestry as global asset class, the sustainable way to secure long-term value. Who doesn't enjoy a walk in the woods? We all do, especially in times like these when hiking has become somewhat of the ideal pandemic pastime. Clearly, the need for protection and dedication to our greenest asset of all has recently shifted into the focus of the general public. The United Nations goals have also attracted investors' interest in sustainable, profitable, and climate-friendly production of timber. The forestry asset class has a special appeal due to global dimension of investment opportunities. Welcome to Mr. von Schmidt, Co-Head Agriculture and Forestry at Colliers International. I'm very thankful to you that you have brought together this interesting group and you will let us know whom you've invited to discuss with you in the next hour. We look forward to listening in on your exchange, but beforehand, I would like to let all participants know that you are all invited to contribute with questions, and you may do so by using the chat function. Let's say in German we say "let's fetz," which means have at it. And I'll give over the reins to you, Mr. von Schmidt. I'm looking forward to your discussion.
Thank you very much, Mrs. Secretario, and thanks also very much to you and Hoya for hosting us today. And yeah, I'd like to start thanking our panelists, a truly international board of panelists that is. We share one thing in common: we all have a forestry background, and yeah, from our experience, whenever you bring 4 foresters together and talk about one topic, you typically get 5 different opinions. So we'll see how that works today. Our topic for today is forestry as a global asset class. And oh, that was a mistake. Sorry, need to go back once. So yeah, we'd like to talk about the different investment geographies as it is really an international investment. We'll talk about what needs to be considered when you're investing in forestry, and we'll definitely talk about the trends we see these days. My guests today, I'd like to start with Reagan Thompson. By the way, we all go by our forenames today. So Reagan, thanks very much for joining us. It's Friday evening for you. Thank you to your family.
Thank you very much for having me here, Nils. Thank you.
Thank you. Time available. Yeah, no worries. So yeah, Reagan is a director at Margules Groome Consulting, which is one of the leading advisory companies, consultancy companies down in the Southern Hemisphere, I would say, with a headquarters in New Zealand. And you're advising on both the forest industry, so the ones producing timber, as well as the ones using it, so the processing industry. But you know, one of your frequent tasks typically is to put a value on forests. And Reagan, how much of an area and how much of a value have you and your colleagues appraised over the past few years? What would you say?
Oh, goodness, yes. Well, we operate in the global forest industry, and I guess in terms of appraisal, we work on 2 types of project. We work on annual appraisal projects required for reporting, and we often do appraisals for acquisition, due diligence. And I'd have to look back at the numbers, but we're well over $10 billion of asset over the past 5 years appraised in annual appraisals.
Very good. Yeah, thank you. Okay, and then we have with us David Robertson, who is working with Scottish Woodlands, and as the name indicates, he's based in the north of Europe in Scotland. David is a director of investment and business development, and while Scottish Woodlands itself is predominantly a forest management company, so a company with boots on the ground, acting on behalf of the people and companies owning the forests in all aspects of forest management, from planning, planting trees, harvesting trees and selling timber, and anything in between. David's specialty is advising clients on acquisitions. So he's frequently evaluating investment opportunities within Scotland or the wider UK, with also some focus on afforestation projects, as we will hear later in the talk. And David, what would you say, how much of an area does Scottish Woodlands manage on behalf of its clients currently?
Good morning, Niels. Thanks for having me along. Yeah, area-wise, we manage around about 250,000 hectares of forestry within the UK itself. So a relatively compact area in global scales, but a significant proportion of the availability that we have in the UK here. So our geograph is, although the name specifies Scotland, we are operational throughout the UK. Whilst we manage 250,000 hectares of forest, there's also the associated ground with those, so there's around about 650,000 hectares of land in total. So these are mixed estates, open hill land and forestry as well combined.
Thanks. So much more than just the tree aspect of it.
Exactly.
Thanks. Okay, and then last but not least, Jasper. Working with Aquila Capital, one of the leading providers of real assets, alternative investments here in Germany. Jasper's focus is on agriculture and certainly forestry. Being responsible as an investment manager for both these asset classes. Jasper, what would you say in terms of forestry? I know, of course, your portfolio is pretty unique, pretty international. How many investment geographies do you currently manage in terms of forestry?
Yes, Niels, thank you for having me. Much appreciated. We, as you rightly pointed out, we certainly, in our company, forestry is the most international asset class. We are in South America, we are in Africa, but over the last few years, we've been focusing on more developed countries such as Oceania, the Oceanian geographics, Europe, and certainly the northern part of the Americas is also in our focus as of late.
Very good. Thanks a lot. Okay, so that's our crowd for today, and I'll now just give a quick snapshot of what we are to talk about. Much of it will focus around the investors' underwriting criteria. So what are the investors' considerations when investing in forestry, and that has changed over time. So I'll come to this slide towards the end of this conversation, but just to give a quick overview here. Things have changed. While the fundamentals in the beginning were at the core of the considerations, then at a later stage, ESG considerations became more important, and today a lot of it is linked to impact investments, and we'll talk about the differences and the different approaches that results in. In terms of a return, certainly, the timber production is at the core of any forest investments, and has been at least up until today, and we see quite a change there. So over the time, it's not just about economic returns. It's also to a good extent and to an increasing extent about social and ecological returns. And nowadays, as a trend, we're also talking about the ecosystem services, so products that forests can provide that can be monetized and add to the commercial aspects. So that's just a snapshot. And while we said forestry is a global asset class, here is a bit of an overview. Highlighted in the back. Highlighted in the back, you see a number of countries where we have expertise in. Certainly those are countries that feature to a large extent interesting aspects of forestry, so they hold large forest areas, and in the forefront is a graph depicting the risk and return profiles of each country. So although there's just a small dot somewhere, there is very different forest behind. So in some places there is plantation forestry, in some places it's natural forest management. But overall, to make it comparable, we've put it here into the graph and put on a generic risk score that considers all kinds of different risk aspects, and the lower part then, of course, what can be a return to expect. And I won't spend too much time on this, just to show you that, contrasting with a James Bond movie title, the world is indeed large enough or big enough. Takeaway message from this one is really forestry is international, and if you ever consider adding forestry to your portfolio, there's the perfect fit out there. It can be easily addressed, it can be found, it can be matched with your portfolio. Now, even though we don't have that much time today, unfortunately, I know the four of us, we could go on forever on these topics, certainly. We can only pick a few of those investment geographies, and I'd like to start handing over to David to talk about Scotland and give us a bit of an overview of what forest investments in Scotland are like. David, please.
Great, thanks again, Niels. Yeah, whilst I'm going to focus predominantly in Scotland today, I think it's worth saying there may be some crossover with the UK. Scotland represents around about 80% of all forestry investment activity in the UK, and that's purely because of geography and other pressures such as population. We have much more land and a much smaller population profile than south of the border in England. So much of what I say today will sort of cross over on that. So if we look at the scale of what we have, first off looking at the UK, we've about 3.2 million hectares in total, or 13% of the land use overall, and that's split roughly 70% private, 30% public sector. And it's approximately 50-50 broadleaf conifer. So what we see really across the UK and especially south of the border in England is much more estate type broadleaf old growth amenity style woodlands. When we move to Scotland, approximately 1.5 million hectares of forestry here, representing about 19% of total land use. Roughly the same split, 70% private ownership, 30% public ownership, but there's a much larger swing towards conifer species here, productive conifer species, with over 60% productive conifer in Scotland. If we look at the timber harvesting aspect, in the UK we harvest around about 11 million tonnes of timber per annum. 65%, around about 65% of that is in Scotland. So, you know, a large amount of the activity is focused north of the border. Unfortunately, we remain the second largest importer of forest products in the world, behind China, with an $8.6 billion trade imbalance on the timber aspect. So it's a significant consideration for the government in the UK to consider this, and in Scotland. Of the 11 million tonnes, around about 55% of that goes into the sawmilling industry, 24% into wood fuels, 12% into wood panel base, a very low percentage, 5% into pulp and paper, and the balance includes other activities such as fencing and amenity markets. We also export a very small quantity of timber, around about 200,000 tonnes a year. As I touched on earlier on, government support is extremely strong in the UK and especially in Scotland. This is really hinged on the Climate Change Act. So in Scotland we have the Climate Change Scotland Act 2019, which set a net zero target for the UK, for Scotland by 2045. That aligns roughly with a net zero target in the UK of 2050. And we have interim targets all the way through that process, 56% in 2020, which I think, because of COVID, one of the good outcomes of COVID is that we stopped travelling as much, and we've probably allowed ourselves to hit that reduction target over that period. One of the key elements of the reduction of overall emissions is sequestration through forestry, planting and product substitution in the building industry to ensure carbon sequestered is stored in the long term in built product. Due to this, there's an extremely supportive regime in Scotland. In addition, the importance of forestry is highlighted as part of the Scottish Government's green recovery from COVID-19. So, you know, again, we're seeing an uplift of the profile of that. To that extent, government support through grants 2019 to 2020 was over £50 million, £52 million. And the majority of that, that's £52 million in Scotland. There's around about another £20 million in England. What's happening in England is slightly different in that, again, population dynamics, land availability, there's much less activity there. So if we focus in on that, new planting, The UK as a whole, 13,000 hectares of new planting last year, so very small in comparison with other geographs in the world. But 11,000 hectares of that, 85% of the total UK, was planted in Scotland. And Scottish Woodlands planted some 4,000 hectares of that, or about 30% of all the planting that was done. We have a large increase of targets coming forward. We had a previous target of 15,000 hectares per annum by 2025, and the Scottish Government has recently increased that to 18,000 hectares. So again, large impetus in the background to try and move the afforestation subject forward in Scotland. To allow us to do that, it's really important to find the best land, and to be able to find the best land available to meet the needs that we have. But we also need to be very careful of the conflict between agriculture and forestry and food production, and that's something that's very much in our minds when we're trying to find land, planting land for clients. And it's worth noting that the rural land market here is extremely competitive. Prices are rising as more competition for quality planting land puts pressure on the market. But to put that in context, we have about 5 million hectares of grazing land in Scotland, so we shouldn't have too much of a problem in meeting the government's targets as long as we're all sensible about how we try to go about that. Very briefly, tree growth here. On average in the growing stock in the UK, our yield class, average yield class is about 16. That means that 16 cubic metres of timber grow per hectare per year. So that's quite low again in international context, but what we're seeing with better quality of land being planted from the 2000s, mid-2000s onward, we're seeing quite a rapid increase in the overall averages of what we can achieve. And it's really not uncommon on good ground with better plant breeding and better husbandry for us to grow yield class 24 or 26 spruce. It's very common for us to go out and measure these kind of levels. In relation to the market, the on-market transactions in Scotland are around about one in the UK, which really means Scotland because 80% of the activity is here. Is around about £100 million of value per year, or approximately 12,000 hectares of land transacting. Now, it's fair to say there's a significant amount of off-market activity happening as well. So really, we see, I would estimate, about the same quantity. So we're looking at £200 million per year transacting and around about 20 to 24,000 hectares. Very briefly on investment returns. Long-term commercial conifer crops in the UK have performed at the level of around about 9% per annum annualised over the last 25 years. So a very solid return. If we're looking at current returns, recent returns, the 10-year average 2010 forward has been 12% annualised, and the last 5 years has been just south of 20% annualised. So we've seen significant increases in returns on a short-term basis from afforestation projects.
And sorry, David, to interrupt, but what would you say are the key drivers behind that? I mean, those return figures in terms of forestry, they are significant. They're huge, but especially when we enter into a double-digit return figure, what drove that?
We've seen very strong activity. A lot of the crops that were planted in the 80s and 90s are now coming into maturity. We've also seen this doubling up with very strong timber price increases, driven by currency exchange factors, a weak pound against the euro and especially the Swedish krona. So the timber prices have driven the property prices to an extent, and if you look at the timber price index versus the property price index, the two mirror each other to the greater extent. So a lot of the background there is driven by pure timber price increase.
Thank you. Yeah, and Jasper, maybe to add to that, I know your company, your fund is invested in Scotland, and coming from abroad, coming from a different currency. David just touched upon the aspects of timber prices and timber markets, which are international but interconnected. What were the considerations in that respect from your end?
Well, as David rightly pointed out, Scotland and the UK as a whole is a net importer of roundwood. So the demand for roundwood in Scotland as well as in the UK can at this point in time not be met by local production, which has some interesting effects from a currency standpoint, because we obviously are noted in euro, whereas the UK is noted in the British pound, which leads to a certain internal hedging effect, to be honest, where import wood prices may rise. This effect translates into local prices in pound sterling. So whenever the euro gets too strong or stronger against the British pound, local prices pick up, and then our revenue in pound gets somewhat offset by that effect. And this has a somewhat of a leveling effect for the cash flow profile of the assets in Scotland.
Very good. Yeah, interesting aspect that is. All right, so we see strong support also in terms of new plantings and the dependency of towards timber imports, or the imports of wood products overall. That's a challenge, but David, it's twofold, isn't it? On the one hand, one is considering the overall economy tied around wood as a general product. On the other hand, there's also quite some impetus from the carbon aspect to it. Do you see that prevailing over the next years, or what would you say will be the emphasis of what would be the main reasons to create new forests in Scotland?
Yeah, I think it's, this space is becoming very interesting, Niels, and I would say that at the start of this year, there was a huge amount of interest in natural capital carbon schemes. Then we were impacted by COVID, and the companies that were engaging with us to look at natural carbon type opportunities fell away for obvious reasons. They had other things to worry about. But I would say in the last 6 weeks, we've seen a huge amount of activity in the natural capital carbon activity and space, certainly here in Scotland. A recent ecosystem services accounts the ecosystem service accounts for Scotland, which were produced in 2019 for the first time, I must say, put the partial asset value of natural capital in Scotland at somewhere around about £300 billion, or 30% of UK asset value. Now, what we're seeing are, that's aside, that's the national the national picture of this. But I think what we're seeing are people concentrating on areas of land that would have previously been used for other activities, i.e. sporting or sheep grazing, or really natural land that had no overall significant value attributed to it, and then starting to look at that in natural capital and ecosystem services basis. And carbon is obviously the driver for this. Peatland restoration, native woodland planting on sites that can't be developed for commercial reasons. So in Scotland here, if you're aware of the geography, we've got a lot of what we call glens, narrow valleys which disappear away into the hillsides, typically with very fragile rural road networks, really not capable of holding and supporting the development of commercial afforestation. So for many years, these areas have been ignored and no activity has happened in them. But now with natural capital, the potential to add value to an afforestation site by sequestering carbon and then selling that carbon to the market, it's opening up larger areas of land which have never been considered previously, or may have been considered, but they were planted with poor quality species and potentially poor quality land planted for the wrong reasons. So this is opening up much greater opportunity for us in this space.
Thank you. Thanks very much. All right, good. Now I think we take a deep dive to the Southern Hemisphere. Reagan, like you to introduce New Zealand to us, please.
Kia ora koutou. Yes, so New Zealand. We currently have around 1.7 million hectares of planted forest. It covers about 6% of our land area. There's around 6.9 million hectares of native forest, and that's around 27% of the total land area. Most of the native area is non-productive, but there are a lot of other benefits that are starting to emerge, and particularly around ecosystem services. And one particular benefit is water quality. And in that picture there, you can see some native bush covering a reservoir dam. There's some conifer in the background, but that conifer is actually being removed and it's being replaced by native. And the benefit of doing that is actually being measured in terms of water treatment and the costs of actually having to treat that water if it was sitting within either a farmland or otherwise a production forest. And that the savings here, you know, we're running into the millions of dollars. So of the planted area, it's dominated by radiata pine. It's about 90% of the total area. There's around 6% of Douglas fir, Pseudotigum zezii, and 2% of other softwoods, 2% of mixed hardwoods. The overwhelming majority of ownership in New Zealand is private. There's still a little bit of government-owned forest left, and that's actually increasing due to a policy from the incumbent government to establish a significant amount of forest over the next 10 years, well, actually from 2017. It's called the 1 Billion Tree Program, and I can talk about that in just a sec. Around 55% of our estate is a plantation estate is an unpruned regime targeting structural grade logs as the highest value output. The remaining 45% is prune targeting clearwood logs. There has been a fairly significant shift away from pruned logs from the 90s to today, just due to the drop in value of pruned logs and the increase in value certainly of the export markets, which in unpruned logs. The forest and wood processing sector exports around 6.8 billion New Zealand dollars, and of that around 3.8 billion was derived from log exports alone. 65% of it is export, 35 of total production is export, 35% is domestic, and we're obviously a net exporter. The industry employs around 35,000 people directly, so it's a significant part of New Zealand's economic situation. As I said, 95% is held in private hands, and around 60% of the land area is owned by owners with at least 1,000 hectares in their ownership. So the remaining 40%, which is over 500,000 hectares, is held by growers with less than 1,000 hectares. And this is probably one of the big challenges in New Zealand forestry, is trying to aggregate those small forest owners into a situation where they're working together to sell their wood and not overburden the market, particularly given we have a fairly significant surge over the next few years in harvest volumes. As said, about 65% of the market is exported. By far the largest destination is China, accounting for around 50.4%, followed by Australia at 9.9%, Korea at 6.7%, and Japan at 6.1%. And of China's 3.4 billion New Zealand dollars of export market, 80% of that is logs. And it has become a bit of a concern for the government, and there's a fairly significant drive now to try and reduce the reliance on export of logs and improve domestic processing. So New Zealand,
even though there is a huge hunger around the Asia Pacific rim for wood, right? Still,
yes, yes. I think it's probably more of a political discussion around job losses due to processing. We've had a significant number of processing facilities close over the last 10 years, and obviously that sort of drives a fairly hot potato in the political scene. So Yeah, I mean, there's a fairly significant discussion topic on its own.
Sure.
We currently produce around 35 million cubic meters of round log per year, and this has been on a steady increase over the past sort of 30 years. When back in the 1990s, early 1990s, the harvest level was closer to 15 million cubic meters, and there was a planting boom around the mid-90s, early to mid-90s, when export logs, particularly prune logs, were extraordinarily high, and based on predictions at an H28 harvest, we would be spiking to over 50 million cubic meters of log harvest by 2022 from the current level at 35 million cubic meters. That has been the sort of New Zealand's much vaunted, I suppose, wall of wood. But it's more of a surge than a wall of wood, and you know, as we know in forestry, typically there's operational constraints that mean those sorts of the wall of wood never really arrives, because what typically happens is there just isn't the operational capability to cut down to increase harvesting at that sort of level. And I think that's one of the beauty of forestry investment, is that, you know, while 28 years of radiata pine might be the optimal age for harvest from a growth perspective, you know, should the market conditions not be right, and by this I mean log prices or operational capability, lack of available harvesting infrastructure, then you basically leave the trees in the ground and they increment yield and value until such time that you can harvest them. And with a radiata pine, you know, you can sort of start doing that up to 35, 40 years. Beyond that, there are higher risks with wind throw and disease and other things that can impact your return.
Right, Reagan, if I may ask one question, one of the key differences probably when talking about forest investments in New Zealand is also about land ownership, and there
Yes.
are certain means different to other places in the world that, you know, are typical for New Zealand. Maybe you could share some insights on that with us.
Land ownership. So in terms of land ownership in New Zealand, I mean, I guess forest ownership is probably one thing that we sort of separate away from land ownership, and we sort of look at forest and land ownership, although they can be the same thing as from an appraisal standpoint, certainly as separate things. We have a significant area of New Zealand that is Māori land. It's been handed back to the Indigenous people, and during the process of handback, a lot of this area was developed under Crown Forestry license, what we call Crown Forestry license, and now they convert to forestry leases with the Indigenous landowners, and now they comprise a fairly significant part of New Zealand's forest estate, and forestry rights and forestry license or leases are a fairly common instrument in New Zealand. We actually have a forestry registered forestry right legislation covering how those particular pieces of forestry right should look, and how they attach to title. I don't know if it's something that's common around the world, but I understand.
No, it's not. It's not. I mean, typically our investors would look at having land ownership, but in a country like New Zealand, that's not necessary to do a meaningful forest investments. You can actually long-term lease the land.
Absolutely, absolutely. And one of the largest estates in New Zealand, Kaingaroa Timberlands, was originally sold on a 3-rotation forestry right, and you know, the owners of that asset still, you know, they still trade it. It's been exchanged hands as a forestry right since 3 times since it was first sold off by the government. And so it is a tradable instrument, forestry right in New Zealand. As I say, it's I guess defined and protected by legislation and attached to title.
I see. Very good.
Yeah.
All right.
So this is, I was going to say, these charts here are pretty interesting. They sort of paint an interesting picture of what's happening in New Zealand of late. And if I draw your attention to the bottom chart first, I mean, we can sort of see that the planting boom of the mid-90s sort of accelerated the plantation area in New Zealand, and we also saw a fairly significant decline in state ownership over that time. And that's what I was saying before about those forestry rights that were sold off of the 3 rotations, actually comprised a fairly significant part of that. But then we see a dip around 2000 and from around 2004 to 2008, and around 75,000 hectares of New Zealand's estate was converted to dairy land as a high value proposition, and that all occurred pretty much prior to 2008, because after 2008 is when the ETS kicked in and there were certain liabilities associated with changing the land use. And so if you look at the top chart, you can see obviously the planting boom of the 1990s. But what's really interesting is what's happening at the end of that chart, and you can see in 2018 there was around 10,000 hectares of new forestry establishment and around 20,000 hectares of new forestry establishment. And this all comes down to this 1 billion trees program that I was talking about earlier on. So the government has basically got this, it's a plan to establish 1 billion trees in New Zealand between 2017 and 2027. And if you calculate that out, it's about 1 million hectares in total. But the interesting thing is, it actually includes existing forestry re-establishment. So it's not as impressive as what it may seem, because more than half of that is going to be replanted anyway. But in saying that, given where we are now, we basically have to establish around about 400,000 hectares of additional forestry to achieve that 1 billion tree target, assuming around 1,000 stems per hectare. But the plan is not specific to timber. It can incorporate carbon. It can incorporate manuka for honeybees. It can incorporate erosion management, riparian planting, biodiversity, social forestry, or any other value associated with forestry. And then some of those sort of native types of processes obviously have a higher intensity of stems per hectare. But what you can see in that, the tail of that chart, is actually the beginning of the 1 billion tree programs that are really starting to take hold, and also the ETS, which is having a significant impact on New Zealand's forestry as well. It's the emissions trading scheme, the carbon scheme, the cap and trade scheme that we have in New Zealand.
Exactly. So another country that has a strong focus in terms of their forestry, also on the carbon aspects of growing trees, carbon sequestration. All right. Thanks a lot, Reagan. We'll come to that aspect shortly. I'd like now Jasper to talk a little bit about the considerations from an investor's point of view. As I initially said, there are some 2 fundamental considerations when investing in forestry. And Jasper, please, what would that be?
Yes, there are. And thank you, Reagan and David, for your detailed overview of the 2 of what I would say are 2 of the, if not the 2 most interesting parts of the world where to invest in timberland at the moment, for completely different reasons. But we, over the last years, our company tried to increase their footprint considerably, both in Scotland as well as New Zealand. So great panel you put together, Nils. Thank you again. Okay, the investor's point of view obviously is a bit more, has a couple of more boundaries than just describing the market, because we're obviously driven by our investors' needs for return and for other aspects in their portfolio as well. But maybe we can start with a very broad overview. We could go about the investor's view for another hour, I would say, but let's keep it short and start with what a timber investment can actually do from a portfolio standpoint. So let's start with a bit of Margules theory. At the top left, you see a number of equity and other indices, and on the top there are correlation coefficients, and the correlation coefficients show how close to indices, or how close to markets go together, how much they go into the same direction. I'm sure you all know that. And what we're holding against these 6 indices and 6 indices is the NCRIF Timberland Index, which is not a perfect representation of the timberland realm globally, but it's actually the closest we can get to it. It's mainly focuses on Northern America, but it only shows that timber investments are very, very little correlated to equity indices and are only somewhat correlated even to the NECRIF property index, which is actually a real estate index. And we obviously have in both real estate as well as forestry and other land use investments, we have the part of the ground, of the actual land. And this is why we're somewhat correlated to the property index. So what we can derive from that is that if you manage to match your IRR and your return expectations with a timber portfolio, which is definitely doable at this point in time, at this point in the timeline, so to say. We'll come back to that a bit later. What you can do is you can reduce your portfolio risk effectively without having to sacrifice, I would say boldly, any of your expected returns. Obviously you can't. This has its limits, of course, but the typical institutional investor, for example, has a quite narrow expectation value or quite narrow expectation when it comes to IRR, total IRR, and cash yields or annual distributions. And a well diversified, well managed timber portfolio can definitely match that IRR and return expectations, and then actively reduces the risk of the whole portfolio via this low correlation that I just showed you. And another aspect, so to say, is the value preservation as well as the appreciation of what you're actually owning in your portfolio, being the forest and the land. And in my view, it's always a good idea to invest in land because they don't make it anymore. So it will only get rarer because we will probably increase in population at least for a couple of decades. So this alone is somewhat of a protection against inflation, for example, but also against other effects. And we basically have two value drivers that keep the portfolio at a certain value and even increase the value. The first one would obviously be land value appreciation, which we talked about a minute ago. Land will probably in the long run in average be more expensive or will appreciate in value. And the other aspect is obviously trees grow. They have the tendency to grow, and if you are a sustainable forest manager, your average wood volume will increase whether or not you harvest. This also have to do with genetic improvement, etc. So the wood volume and the value of your wood would on average increase over the time. Thank you, Niels.
Pleasure.
So the second part is where to invest, what to look for in a forest. We talked about wood prices and we talked about markets, and it very much depends on the risk affinity that the investor has, but also it depends on these four cornerstones that are on the slide in front of you. The acquisition price of the land as well as the valuation of the stand at the point of purchase pretty much make or break any case that you may have. Very prominent example for a bit exaggerated land prices will probably be even Germany, where the multiples for amortization are somewhat on the higher side. Whereas in New Zealand, for example, as well as Scotland, you have quite reasonable land prices, I want to call it, obviously increasing in value due to high demand, but still very much investment grade for the typical institutional investor, and for us, definitely for us. Second aspect would be the biological yield. The higher the annual average growth of the trees, of the stands, the quicker the cash flows come. This is one aspect, but the more important aspect is that the shorter your rotation periods are, 70 years for a spruce in Germany against 25 to 30 years for a radiata pine in New Zealand, the stands are in the risks or stand in the risk for 40 less years in New Zealand than in Germany. So you have active risk reduction via a reduction of your rotation time. And this means that a high biological yield of the trees also correlates with a bit less of a risk factor in that. Third cornerstone is obviously the market. The market has to be accessible, infrastructure has to be there, and the pricing mechanisms have to be somewhat transparent and reliable. This has very much to do with the risk affinity of the investor, but our typical investor looks for somewhat stable cash flows, and the probability of those existing is higher the deeper the market is, so to say. And finally, the fourth aspect, which actually should be the first aspect and actually should be 3 font sizes larger than the others, is the management. Nils shortly or briefly touched upon that in the very beginning, but management is the most important part, or plays the most important part in risk management. Biotic damages, abiotic damages, fire and wind, beetles, etc., all can be mitigated before we even decide where we invest. So geographical selection is the first step in risk mitigation and the first step in risk management. So these perceived risks, like fire and beetles and wind, those can be managed quite well. And what we then cannot manage, we can always insure. But the highest risk for any forestry portfolio, in my view, is bad management. Bad management, a bad forest manager can produce damages in the woods by actively doing something or not doing something even that can heavily reduce the returns and is very dangerous for your case, actually, because it translates into decades of growth or non-growth.
Thanks a lot, Jasper. Yeah.
If I may just add something to that, yeah, Jasper, sure. A bit of a war story about bad managers, and this it transcends just incapable managers into the concept of actually a corrupt manager. And we worked with a fund once which that employed a manager, and I won't say where it was, but that manager, because they were dealing with large sums of money to establish fairly significant forestry assets, actually extracted, and I think it was around $4.8 million into their own pocket. And the damages, obviously, the cost of that was fairly significant, but also the reputational damage for that manager. So for that fund manager, so you know, it's so important to get the right people on the ground.
Yeah,
I think you know there are some significant operational risks as well, and you know one of the issues that we've had recently were, you know, a local manager deciding to use something that he thought was better. It was a different type of fertilizer for establishing Sitka spruce on poor sites. It was slightly cheaper. It was the same application method, he thought, and we planted around about 250,000 trees by applying this fertilizer into the planting position, into the root hole, when it should have been overcast on the trees, and we killed 250,000 trees in a site. So, you know, whilst the intention was extremely good to reduce the cost for the owner, the actual end result was a complete disaster, which we as a reputable forestry management company had to put our hands in our pockets to rectify. And it's just one of these learning points that often management can go wrong for almost the right reasons. People are trying too hard to work on behalf of their clients.
Yes, right. So thanks very much. We don't want to scare our audience too much about those negative examples. You know, feel free to address any of us. We can certainly get you in touch with the proper people on the ground who can long-term manage your forest successfully. Ms. Seculario, you'd like to pose some questions, probably.
Yes, I can just say no one's scared. I've got a big load of questions for you. So just looking at the time, help me be brief but concise. I know this is always the moderator asking the most impossible things, but let's tackle it. The first question that was asked was, can new technology assist in the standardization of global wood values? Who would like to answer the question? Feel free to raise a hand.
Okay, I'll go for it then. David, would you
Yeah,
like to?
I can go. I mean, I think new technology. One of the things that's definitely coming forward in the world is the use of drone imagery and remote sensing of forests. And I think it's something which is in Germany relatively well progressed. I certainly think some of the companies I've seen working in Oceania are quite advanced. Not something that's used terribly much in the UK at the current time, but I think disease identification, plantation assessment, and overall maintenance requirements, very, very strong. So yes, I think there is definitely potential for quality improvement through remote sensing. I can't think of other examples at the current time.
I was thinking in terms of technology to normalize forest values. I'm thinking more along the lines of, I suppose, engineered wood products and the technology underpinning the use of lower value wood products currently into higher value wood products, and increasing the chip or otherwise a residue component of a forest would sort of have, in the future, I think it could potentially have a fairly significant value on improvement on forest values. Also, the use of forestry residues for bioenergy, which we are all sort of fairly familiar with and starting to use, and the concepts of biopolymers for plastics as well, are areas of technology that really have a blue sky potential.
Maybe a third example of what modern technology can, how modern technology can equalize or average out some of the effects. One example would be Finland, where we have a very, very accessible and transparent price index for each region in Finland, because obviously Finland is 70% covered in forestry or in forests, and forestry is one of the major economic drivers in Finland. They have a very, very close eye on their timber prices and publish them quite regularly. So even a proper database can work towards making more transparent and more unified timber pricing and putting a value on the timber.
Thank you actually for that remark, because it leads perfectly on to the next question that I would like to hand over to Nils von Schmidt. Because you touched upon off-market deals earlier on in your discussion, how is it going in terms of transparency in the market? Is there an increase of transparency that we can notice, and is it projected to become more transparent as a market in the transaction area?
In a way, yes. I mean, probably, many countries kind of lack this general marketplace. It then depends on the typical means of sale, in terms of sale. So, for instance, in Scotland, a lot of the transactions is handled by a couple of brokers. So those would be on-market deals. The off-market share is comparably small. That's certainly different in New Zealand, and way different in Germany. So yeah, it really depends on the geography that you're looking at.
Yeah, well, I mean, it's a bit similar to the real estate market, isn't it? It depends on the actors and the location. David, we got a question here for you. What percentage of those returns you mentioned earlier comes from government incentives and carbon payments, as opposed to the returns from traditional harvesting? Sorry for the shift in topic, but that was the next question.
No, it's a very valid point, and it's one that I was actually wrote some notes to come back to anyway. It's fair to say that these returns are mainly predicated on capital growth. So they're not generally in UK forestry terms. We're not looking at a significantly high yield. We're looking at capital growth yield, which is a slightly different aspect, but it's overall forest value over a period of time. The figures I quoted earlier are slightly altered by government incentives, but to the smaller extent, because they really only come in at the new planting level, and really the figures I'm talking about were for plantation sales, so mature plantation sales, and really carbon isn't accounted for in these figures at the current time, because the carbon trading aspect of forestry in the UK is, I wouldn't say in its infancy. It's been around since 2010 or so. It's been around for about 8-9 years, but very low volumes of carbon are trading at the current time. So these indices don't really take carbon into account. Which is why carbon can give us a significant additional boost to these figures, especially in the early years.
Yeah. Reagan, on the long-term leasing in New Zealand, how is the exit value calculated if, say, 3 rotations and then on exit there are crops remaining?
It will depend on the finalisation. I guess it'll depend on the forestry right. So what will typically happen is if you get to the last rotation on that forestry right, you harvest the trees, and there may be a requirement to clean up your harvest residues and replant. Most of the time you're required to clean up your harvest residues and ready the land for planting, but you don't actually have to undertake the planting. Typically, because of the way forestry works in New Zealand, and particularly if that forest was established before 1990, it's a key date in our ETS, our emissions trading scheme, it would be prohibitively expensive to convert that piece of land to any other use than forestry. So when the forestry right expires, the landowner will then need to either establish a new forestry right or plant trees within 4 years, trees capable of reaching the definition of forestry under the emissions trading scheme.
I just received another question. Well, it's a statement and half question. Thanks a lot for this very interesting webinar. In regard to ecosystem services, especially carbon storage within the forest, I am wondering if this is expected to become globally a constant revenue stream on a reasonable level for forest owners. There are already initiatives in Germany from owner associations to convince politics to refund such forest benefits. But there are also concerns that such benefits are already available for free, and therefore politics might not see the need to spend money for this available benefit. Someone like to comment or share experience?
I can have a crack at that because I'm fairly familiar with an emissions trading scheme. Obviously, we've had one running since about 2008 in New Zealand. And one thing I'd say is that depending how it's set up, it's not a constant flow of revenue. And in New Zealand, we've moved to what we call an average accounting method. And that means that basically, if you take a piece of land that was bare and you establish trees on it, you have tools to calculate what the average volume of carbon will be on that piece of land given the rotational regime you intend to develop. But you basically have to maintain that forest in perpetuity. So for the first half of the rotation of that land, you accumulate carbon credits, and then you reach a ceiling. And thereafter you can't claim any more credits, that's it. And so if you actually convert that land from forestry into another land use, you have to submit that liability. That's how the New Zealand ETS works. So it's a fairly significant benefit up front, but then it levels off. And when I say significant benefit, some of our research looked at land expectation values on forestry, and that's just basically the value of net present value of a forest before you put a tree in the ground. With the addition of carbon under average accounting, we were sort of looking at 300 to 600% increase in returns for a greenfields investment. So it's fairly significant.
Wow, the questions keep on coming. I see we need a round for this. Maybe we can address one last question in this round, and then to all the participants still listening, we will get back to you, responding to your questions, and we'll hand them on to the panel. Jasper, I'd like to ask you, how would you incorporate climate stress risks induced by a changing climate in the decades ahead of us? I mean, you touched upon this briefly earlier. Maybe that could be a nice summary, because looking forward, obviously we want to maintain this planet, and yeah, maybe this asset class can contribute on a large scale.
Yes, we're very much working on it. Yeah, climate change obviously is quite a factor, and we foresters we think in generations. So 10 to 20 years would be actually a very short time frame in my eyes. So wherever we can, we try to not only to implement more climate resistant tree species out of ecological reasons, not only out of ecological reasons, but also out of economic interest, because we in most countries it probably will get warmer and drier, so we can't really go around changing the forest management regime and the species rotations regime. Nice side effect from economics standpoint is that the more diversified your stands are, the more tree species you have in 1 hectare and 1 stand. It's more ecologically stable, but also more economically stable. So we tend to witness over the last years that every measure we take in order to make our stands and the whole forest estates that we are having in our portfolio more resistant to the projected climate change, the more we look into it, the more we see that ecological and economical improvement go very much hand in hand with basically all of the climate change scenarios. So it's not really a question of if we do it, but to what extent can we do it in the shortest time frame possible. Forestry is a very long-term investment. Trees take at least 25 years to grow, at least in developed countries. In the geographics we're invested in, more like 40 or more years. So we're trying to do that as quickly and as thoroughly as we can. And also, as we talked about, alternative income streams are very much important. At least carbon, but in the future, but also also other functions that the forest performs: water preservation, groundwater preservation, etc.
Thank you very much, Nils. Maybe just a quick summary, and then we'll definitely, just for everyone who's still listening in, we will send your questions to the panel, definitely, and you will get some answers back from us. But just given the time, maybe you want to wrap up the discussion round quickly.
Thank you. Thanks. Yeah, gentlemen, thank you very much for this contribution. As well, actually, Jasper just said it in the end almost. I mean, forestry is the one land use that has the highest potential of sequestering carbon. Climate change is the largest, that's a global challenge. Forestry can play a very key part in it, and we're quite happy to live in these interesting times, let's say, where those aspects, those ecosystem services, a very technical term for something that's really important, become recognized by the greater public, but also they receive a value to it. And also, as Jasper just said, we've been talking about carbon, which is an important part or an additional part in the UK or in New Zealand, to just give 2 examples. Other than that, certainly water, that's kind of the next big thing coming up, and forests have a very positive impact on water quality, water availability. And yeah, we very much look forward to being part of that. I think everybody here in this round. So thanks.
Definitely, that sounds like a lot to discuss. New rounds. That'll be great having you back. For now, it's been great having you. It's a very interesting debate and a valuable topic to discuss. So thank you all very much. We will be looking forward to our next session, which is starting in about an hour. On the agenda will be real estate with a focus on investment strategies in Germany and putting it into a global context. And I'm very much looking forward to going through that round with your colleague, Nils. It's Christian Kadel, Head of Capital Markets at Colliers. So again, thank you all very much. Thank you to all the participants for your great questions and your interest. And yeah, the digital talk will be available for free as always. Wishing you all a wonderful weekend. And should you join us in an hour, see you then.